Hello, good morning, ladies and gentlemen. Happy new month to you, and I hope you are anticipating the beginning of the new week, the new month, with high hopes to make some profits during the course of the week. So, once again, I welcome you all, and for those who are joining me for the first time, you are highly welcome on board too as well. So, what we simply do here on a daily basis is to do follow up details on the publication I used to share on my YouTube channel during the course of the weekend. So we do follow up details on this instrument. So we have about four instruments that we are going to be monitoring this week, and these are the US oil, the GBPUSD, the XAUUSD, which is the gold, and the USDJPY. So these are the financial instruments that we shall be monitoring this week. And one thing I do here is to review the 1 hour time frame so that we can make a decision based on this current market structure. So I wouldn't be going into the details from an holistic point of view. That is how I got to this point. I wouldn't be going into that as this has already been explained and emphasized in my videos that I shared during the course of the weekend. So if you had not watched that video, I would implore that you watch them so that you can have a background knowledge of what we are talking about here. You have a sense of how we got to this point, so you will be able to make your own personal decision based on whatever we have deliberated on here during the morning live session. So for the sake of simplicity, I have dropped the link to those videos in the description box of this current live video here. So I would advise you after the session, try to watch them, choose whatever appears that interests you, watch them so that you can have a background knowledge of how we got to this point. So with that being said here, let's dive right into the business for today. So today, this is the first trading day for the month of April. That's the first trading day of the month, and obviously there is a tendency to see some indecision in the market as participants are trying to test waters to decide where price action might likely be going. So it might be a little bit slow at the beginning of the week, and coupled with the fundamental event regarding the US oil, and I hope you are aware that the OPEC Plus had a meeting that was 2 days ago, and the decision that was made then was to they pledged to cut oil production, and when we sum the whole pledge, it dovetails to about 3.66 million barrels per day. That is whooping. That's about 3.67% of the total global demand. And from this point, we have been seeing some traction in that regard as we saw trading activity happen during the course of the weekend, and this has reflected on the chart as a bullish gap. If you look at your US oil chart this morning, you would have noticed that huge bullish gap here. So last week trading session, we saw how price action closed just right around the $75.80 level, but at the beginning of the week we saw how price resumed the week right around the $80.50 level. So we had a huge bullish gap of about 50 pips, approximately 48 pips to be specific here, and we might likely be seeing the oil price jump over 10 barrels during the course of $10 during the course of the week. So we are going to be looking at how we are going to be positioning ourselves as well. Then another thing about the pairs we are monitoring is the gold. And on the gold, we saw how the gold rose astronomically to hit the $2,000 level in the last couple of weeks. How are we going to see this momentum continue? And with the ease in the Fed, the US Fed regarding the rate hike, we might likely be seeing less aggressive action from the Fed in the coming weeks, and this might likely give some little point of comfort for the US dollar, and we might likely be seeing some profit taking activity going on the XAUUSD as well. So these are the things we are going to be looking at today. So without much further ado here, let's dive into the business. Now, the first thing we normally do here, as usual, is to ensure that we keep tabs with the fundamental perspective of the market. You all know that we look forward to these fundamentals. Obviously, these fundamentals serves as a catalyst. So whatever technical position we are making today or during the course of the week, we need this catalyst to drive price movement so that we can actually be able to make profit of the market. So it's only when price action moves significantly well that we could actually make some profit. So we shall be looking at the economic calendar and let's see what we have for this week. So this week is laced with quite a lot of macroeconomic event to look forward to, and this might likely lead to some level of indecision in the market where we might likely be seeing some choppy situations. So we should also get prepared for this, and most of the time these choppy situations are always a headache for traders, but since we already know that we might likely be seeing this, then it will be of less stress to us. So at the beginning of the week here, today, Monday, April 3rd, we have the ISM manufacturing PMI, which is coming up in, I think, about 5 to 6 hours from now. And this index normally shows the business condition in the US manufacturing sector. It is a significant indicator of the overall economic condition in the US. So you will agree with me that this is also an high impact event. And the previous data here came in at 47.7, and the consensus is projecting a 47.5. And in fact, anything below the 50 is not a good sign for the US economy actually. So we are going to be looking forward to see what the actual data will come in. Is it going to be as expected, below expectation, or beyond expectation? So these are things that we are going to be looking forward to today, and obviously we shall be seeing the reflection of this anticipation on the chart as price action. So I think that is the only macroeconomic event that we have for today. So we shall be diving right into the chart right now to see what is really going on in the market and how we intend to take advantage of any potential trading opportunity. So as usual, the first commodity we are going to be treating this morning is the US oil. So I hope that you have watched the video on the US oil so that you can have a background knowledge of what I will be talking about here. So my center of focus this morning is going to be on the 1 hour time frame, and looking at the 1 hour time frame here, what I was able to identify from this current structure, the first thing first here is that huge bullish gap that you will see on your screen. As you can see how price you can see this 50 pips bullish gap here. Hold on a second, let me highlight this. So it's about 48 pips bullish gap. Okay, bullish gap. Let me put this right inside the box. Let me place it right in the center. I give this a yellow color, and then I think we are good like this. Sorry. It's supposed to be a yellow color. I give this a green color. So we can see we have a 48 pips bullish gap, and this is quite a huge move, and it's very obvious that there are a lot of trading activity that happened during the course of the weekend. So right now we saw how price action had started the week at the $80.50 level on the bearish note, where price action dropped into that $79 area, and we saw some buy pressure resume from that area. So what we can simply decipher from what has been happening here in the last 1, 2, 3, 4, 5, 6, 7, 8, 9 hours now is that price action is trapped within that $80.50 level and the $79 area. And what this simply means is that there is a level of indecision right now, as we don't know if there will be profit taking activities, that is those who had actually took advantage of those positions during the course of the weekend would want to be doing some profit taking activities, which will be reflected on the chart in the form of a retracement of that previous impulse leg, probably back into structure. We have the $76 level. We also have this bullish trend line in anticipation of another wave of bullish momentum. So that is one scenario we are going to be looking forward to. And the other possibility here is that the consolidation phase here could turn out to be a trend continuation pattern, where the breakout of the neck of the resistant line at the $80.50 level will incite a trend continuation to the upside. So it's quite a simple setup that we have here, and we shall be on standby to be able to take advantage of either of these opportunity. So with a buy stop order sitting above the $80.50 level here, we hope to take advantage of a potential trend continuation to the upside. However, if price action breaks down the $79 level, I'm of the opinion that this might turn out to be a retracement down into structure. And if I zoom out a little bit so that we can see things clearly here, you'll recall that last week's trading session we had a demand platform around the $72.50 level, which drove price action to the upside. And this is more or less an impulsive move here. And what we have here is a situation where price action has broken out of the resistant line of that ascending channel. Remember, if you had watched my video, I laid emphasis on this ascending channel here, where price action was finding higher highs and higher lows since the mid-month of March last month. So we saw the breakout of that resistant line here, which at this point in time I will say shares a confluence with that $76 level. And if price action ever breaks down that support line at the $79 area we identified this morning, we might likely see price action drop back into the resistant line. We all know that from a technical standpoint, whenever price action breaks out of a structure like this, we expect a retest of structure to happen at one point in time to incite the second wave of that bullish momentum. So if that is going to be the case here, then we might be in for a counter trend opportunity, as price action might likely drop further to the downside. So one thing I will say here is, for those who don't feel comfortable taking counter trend opportunities, I would advise that you stay out of this trade. And for those who are scalpers and people who take counter trend opportunities, well, we might want to look out for selling opportunities at the breakdown of the $79 level, and if possible, you scale down to your lower time frame. Look out for selling pressure right below the structure to further confirm the sell momentum in this market. Then you could actually join that bearish move to the downside. And one thing about counter trend trade is that you want to ensure that you are around your trades, as you want to continue to secure your position as price action moves in your favor. So that is why I said, if you are not comfortable taking a counter trend opportunity, you might as well stay clear of this trade and wait for this retracement phase to culminate probably at around the $76 area, which shares a confluence with the resistant line, or the $78 level for a buy opportunity in this market. So it now depends on how price action reacts to the structure that will determine if we are going to be getting ready to buy, or probably getting ready to add more sell position if price action breaks down the structures. So this is what we shall be looking forward to today. So we have a simple setup. So let's use this as a yardstick for guiding our trading activity for today. So you have your buy stop order just right above the $80.50 level, sell stop order below the $79 area if you are comfortable taking a counter trend opportunity. So that is my view here on the US oil for today. I hope that I made myself clear. You can also screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. If you have any question, feel free to let me know in the comment section, and be rest assured that I will be willing to be of help in that regard. So with that being said, here on the US oil, I wish you best of luck on this one, and then we shall be moving on to the next instrument, which is the GBPUSD. So like I said, we will be focusing on the 1 hour time frame here, and on this one too as well, we are yet to make any open position at the beginning of the week on the GBPUSD here, as we finally saw price action break down the 1.23500 level that was last week's trading session, and the week has started on a bearish note here. As you can see, price action started at around the 1.23320 level here, we saw this bearish move to the downside. We saw buy pressure resume around the 1.22750 level to bring this impulsive move, this engulfing candle as price action approached the resistance line for this week. So we have the highest point for this week at the 1.23320 level, which happens to be the resistance line, and we have the support line here at the 1.22750. And you all know what we look out for whenever we have this kind of simple flat channel. We want to see price action either break out of the channel or break down the channel for a trading opportunity here. So that is why I had this illustration on this channel. Then there is one thing I would like to state here about this current structure here on the 1 hour time frame. Remember last week trading session, we identified this bullish trend line, which actually has been supporting the bullish momentum since the beginning of the month of March. And look at what happened here on Friday. Price action finally broke down that bullish trend line, which happens to be the first time price action will be breaking down that structure in the last 3 weeks. And this for me is a signal that we might be going bearish in this market. So this is a bearish signal already, and we might likely see a confirmation if price action comes back to retest that structure. So this is the bearish signal here, and we might look forward to price action climbing up to either retest the 1.23500 level or the bullish trend line that was broken on Friday to inside another wave of bearish momentum to the downside. So for this situation here, I will be deleting this buy breakout retest at the meantime, as we are not going to be buying this one at this point, as we need price action to we need to see how price action will be reacting to the 1.23500 level and the bullish trend line here to decide if we are going to be getting ready to buy or we are going to be getting ready to sell. But if we look at this from a theoretical standpoint, it's more or less tending towards a bearish momentum in this market. So what we are going to be doing here is to remain patient. If price action breaks out of the 1.23220 to the upside, we want to hold on and wait for something like a reversal pattern anywhere. It could be below this level, it could be below this area, it could be around this area. So we need to be very, very patient, as this could take about 3, 4, 5, 6 hours before this formation happens. So we are going to be holding on to wait for a reversal pattern to happen here before we join that bearish move to the downside. And to further emphasize the strength of the sellers in this market is the sharp rejection of the 1.24200 level, which happened on Friday last week's trading session. We saw that the attempt by the buyers to break out of that structure was strongly met by the sellers, which ended up with a candle closing in the form of a shooting star pattern. And from a technical standpoint, this is a very beautiful signal that seller strength in this market cannot be ignored. So what I will be doing here today to ensure that we find things a little bit easy to be able to partake in this potential opportunity here. So since we already have lower highs in this market, definitely we want to be connecting the series of lower highs so that we can use it as a yardstick for trading activity today. So we should be having something like this to guide our trading activity. So when we connect the series of lower highs, this is what we will find here. And so for the sake of clarity, to make this to emphasize the importance of this trend line, so I will be thickening it a little bit, but let me figure, okay, thicken it a little bit. I'll give it a red color to emphasize bearish. All right, so we bring back our candle chart, do some little readjustment here. So we shall be using this trend line as our yardstick for trading activity. So I want to see price action come into structure here and start seeing some rejection. We could see a sharp rejection of that bullish trend line. Price drop below the structure, evolves into a reversal pattern. Then we should have a sell stop order below the 1.2350 level, where we could join a sell momentum to the downside. But be rest assured that I will be with you in the comment section on my TradingView platform to give you an update on what my expectations are after monitoring how participants in this market will be reacting to that current structure. So on the GBPUSD, we are holding on to a bearish bias here, but we want to be patient enough to wait for this market structure to mature before we want to be joining any potential trading opportunity in this market. So that is that on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section. So with that being said, here I will be moving on to the next pair. And the next pair we are going to be looking at this morning is the XAUUSD. On the XAUUSD as well, we have been witnessing some selling pressure since the beginning of this week. As you can see here, price action started the new week at around the 1,971 level, which happens to be our resistance line for this week. Then we saw some buy pressure resume around the 1,957, and then we saw price action break down that structure, which for me at this point in time is a signal that we are likely going to be going bearish for this week. But one thing we need to do here is to remain patient. We need some confirmations to happen, since we already have a breakdown of a structure, and you all know from a technical standpoint, we want to see price action do a retest of the structure that was broken for us to be able to join this bearish move. And if you had watched my video on the XAUUSD during the course of the weekend, I laid emphasis on a structure which was identified on the 4 hours time frame. I would implore that you watch that video. Please watch it so that you can have a background knowledge of what we are talking about here. So on the 4 hours time frame, we had a beautiful a beautiful pattern which comes in the form of a pennant, and from a technical standpoint, this pennant pattern could transition into a trend continuation pattern, and at the same time it could transition into a reversal pattern. And the only thing we are going to be looking out for whenever we have this kind of pennant pattern is to see price action break out at either side for a signal to happen in this market. And if you look at what has happened here during the early hours of today, this is the support line of that pennant, which you can see here. You can see throughout last week's trading session, we saw how price action consistently respected that area, giving us a clue into the strength of the buyers during the course of last week. But one thing about this structure is that buyers found it difficult to find a new high. As you can see, we have the bearish trend line, which emphasized the lower highs in this market, giving us a clue into the strength of the sellers too as well. So there is still an exchange between the buyers and sellers here, and at a point in time we are going to be having an explosion, and this explosion will either come in the form of a breakout of the channel to the upside or a breakdown of the channel to the downside. And what has been happening here since the beginning of this week is a signal that price action appeared to have broken down the support line of that pennant structure here to give us a bearish signal. And with the situation we have here, we'll have no choice than to start looking out for selling opportunities in this market. And in order to make things a little bit easy for us, what I did here simply was to bring out my Fibonacci retracement tool, run it through the previous impulse leg here, which started this week, and then run it through to the bottom here. And what we do here is to aim at an area between the 50 and the 78.6% of the previous impulse leg, which happens to be the golden zone area at this particular point in time. And with the situation figured out here, so we have a sell window around this area. Now with a sell window here, what do we want to be seeing within the sell window? Well, I'm looking forward to price action transitioning into a reversal pattern. It could be a double top structure, something like this, breakdown retest on our lower time frame to incite that bearish move to the downside, or we could have price action evolve into a head and shoulder pattern, something like this, and then we had identified the neckline of this pattern. Then we join at the breakdown retest of the structure. So what this simply means is that within the sell window here, I want to see strength of selling pressure around this area. That is signs that buyers are finding it difficult to break out of that structure. then I will be anticipating a bearish move to the downside. So on the XAUUSD this morning, we are also going to be very patient here, and like I told you earlier, it is very likely that we see choppy situations during the first half of the week before we start seeing some momentum gain during the later part of the week. And let's be on standby for this. And also remember that we have a macroeconomic event coming up later on today, which is, I think, about 4 to 5 hours from now, and that is the, hold on a second, we talked about it earlier, that is the ISM manufacturing PMI. So let's see how price action will evolve prior to this event and after this event, and be rest assured that I will be with you in the comment section of my TradingView platform to give you an update on what my expectations are after monitoring how participants in this market will be reacting to that structure. So that is that on the XAUUSD. And one thing about this structure is this, that if selling pressure continues here, and there is a likelihood that we could have multiple entries, as we have structures already figured out like the 1957 and the 1950, where a breakdown retest of these levels will be welcoming and more selling opportunities in this market. So I wish you all best of luck on that one. Then I will be moving on to the last pair for today, which happens to be the USDJPY. And on the USDJPY, price action has been bullish since the beginning of this week here. And remember what I said during my video on my YouTube channel, the publication on the USDJPY. Please watch the video to have a better understanding into that. And we talked about the 131.00 level, which happened to be a very strong determinant of price action. It has a strong memory for buying power, which actually lasted about 10 to 11 months in this market. And as long as price remain above the 131.00 level, we want to continue to look out for buying opportunity in this market. And currently price action is trading above that demand zone. Then another thing about this structure is if you look at what's happened since Friday here, it appears price action is bullish, and if we connect the series of higher lows, we have this bullish trend line figured out here. So the bullish trend line here will be our yardstick for buying opportunity, and there's still a tendency that price action could still come back into that bullish trend line in anticipation of another wave of bullish momentum. So we are going to be taking this into consideration as well. So we are not going to be caught with a surprise if price action breaks down the current structure to the downside. So we have a bust up there to look out for more buying opportunities. But one thing I did here this morning is to try and see how participants in this market will be reacting to this current structure. And what I found out was a consolidation phase between the 133.400 level, which happened to initially be the resistant line for the week. As you can see here, selling pressure negating all attempt by the buyers to break out of that structure. Then we also had the support line for the channel sitting at the 132.850 level to give us a consolidation phase. And from a technical standpoint, you all know what we look out for whenever we have this kind of setup. We want to see price action either break down the structure for selling opportunities or break out of the structure for buying opportunity. And as you can see here, in the last 4 to 5 hours, we had a breakout retest of that structure to confirm that the resistant line is no longer strong enough for sellers anymore. And with the situation here, you should have had your buy stop order triggered at this particular point in time, as I shared this update on my public platform, that is the TradingView platform, where we have this buy position running at this point. And for those who are already in this trade, well done to you for being on standby. So let's see if the market will continue to the upside. And for those who had missed out on this opportunity, well, I think we also have another resistant line right now since the breakout of that previous one here. So we have something right here at around the 133, hold on a second, 133.750. So let's just identify that level. So I will just relabel this. So we have the 133.750 level where a breakout retest of that structure should be welcoming additional position to our existing trade. So for those who had missed out on this opportunity, well, you want to be on standby to catch that move if price action ever breaks out of the 133.750 level. And as you can see here, this is an area where sellers came in at one point, I think a couple of hours ago. So let's see if price action breaks out of that structure, and if it does, then we want to be anticipating another buy position in this market. However, if we start seeing a situation here where price action drops to the downside, taking us out of the buy position, drops below the 133.400 level, and we start seeing that buyers are finding it difficult to climb above the structure, then we might be getting ready for selling opportunities. We can sell below the structure, add more position at the breakdown of the structure. And remember, I told you earlier that we have a box stop at around that bullish trend line, which might likely incite another wave of bullish momentum. So we don't want to get too surprised when we start seeing selling pressure taking us out of the current buy position that we have here. So that is my view here, but if it looks a little bit complicated, feel free to let me know. I will shed more light on whatever aspect you really do not understand. And at the same time, I will be with you in the comment section on my TradingView platform to give you an update on what my expectations are if anything sudden happens from this current market structure. So on this note, I want to wish you best of luck during the UK and the New York session today, and I hope to see you right in the comment section on my TradingView platform as we continue to monitor price action. So do have a wonderful day, everyone, and once again, happy new month to you guys. And let's see how things goes before the macroeconomic event today. Do have a wonderful day, everyone. Bye bye.